Good morning, traders, and welcome to BCR's morning market analysis. Markets are digesting dovish signals from Federal Reserve's Jackson Hole Symposium, with Powell's remarks driving shifts across currencies, commodities, and safe havens. So let's take a look at the key moves. First up, the dollar index, which fell to a near 1 month low of 97.56 last week after Powell hinted a possible rate cut in September, citing rising labor market risks and restrictive policy conditions. The futures markets are now pricing in a 91% chance of a 25 basis point cut next month. Technically, momentum has weakened with the RSI around 45 and a bearish penetration pattern on Friday's close. A drop below 97.56 would expose the 97.19 level and potentially the psychological level of 97, while resistance lies at 98 and the 98.75 level. Next up, let's have a look at WTI crude oil, which rebounded from a low of 61.35 last week to trade above $63 a barrel, making its third straight weekly gain. A sharp US inventory draw, stronger exports, and geopolitical uncertainty around Russia-Ukraine peace talks have supported prices. Technically, momentum has turned bullish with golden cross formations on the 5 and 10-day moving averages. Resistance is seen at the 20-day moving average near 64.4, with scope towards 65.76 and even 67.2 if momentum holds. On the downside, support lies at 62.74 to about 62.83, with deeper risks towards 61.43 and the psychological level of $60. Next up, let's have a look at gold. Gold climbed to $33.78 per ounce, underpinned by dovish Fed expectations and persistent safe haven demand. Traders are now betting on up to 3 rate cuts this year, while geopolitical risks from stalled Russia-Ukraine peace talks are adding support. Technically, gold broke above its recent 33.10, 33.60 range with resistance at $3,400, 34.09, and potential upside towards 34.39, and even the record level of $3,500. On the downside, support is seen at 33.46, followed by the 100-day moving average near 33.16 and the psychological level of $3,300. Lastly, let's have a look at the Australian dollar, which recovered to 65 cents after hitting a 2 month low of 64.14 last week. It still posted a second straight weekly decline. Powell's dovish tone weighed on the dollar, while domestic business activity provided some support for the currency. Technically, the Aussie trades near its 8 and 89-day moving averages, forming a bearish death cross with RSI below 50. Key downside targets include the psychological level of 64 cents and 63.83 and the June low of 63.72, while resistance comes in at 64.83 and the psychological level of 65 cents. A break above could lift momentum towards 65.68 and the psychological level of 66 cents. Well, the Fed's dovish pivot is shaping expectations across markets, weakening the dollar, supporting gold and oil, and then helping the Australian dollar stabilize despite a bearish backdrop. All eyes remain on the September policy meeting for confirmation of the Fed's next move. That's all for today's morning market update. We'll be watching these key levels as the week unfolds. As always, manage your risk and happy trading.